Hey guys, welcome back to Passive Money. My name's Alex. That's Kirby. Today we're going to be talking about our next moves heading into the stock market in 2023. So, Kirby, before I get started, what are you doing? Are you doing anything different, or are you just kind of doing the same thing? Or
Uh, for me, I'm just going to keep it simple. Keep it simple meaning I'm not going to. I mean, you know, back at the beginning of this year, I talked about in the class. We talked about how we was headed for higher interest rates in the down market. Did I expect it to be down this far? No. I thought March would be our lows, but now we're in June. We had the June lows and stuff like that. So I didn't expect it to be down this much, but the method still didn't change. I mean, we knew that growth stocks, stocks that wasn't didn't have positive earnings, they was gonna get crushed. Stocks that were trading not based on price to earnings, they were trading on price to sales, gonna get crushed. Do I have some of those stocks? Yeah, but I try to get the most high quality of those stocks. But it's not life changing in the portfolio. But what I mean by keep it simple is I'm not going to change much of what I've been doing. Uh, I mean, as you know, most of my money go into index mutual funds, Nasdaq 100, S&P 500. That's it. I might add a little bit more blue chips to my scene because I don't know how long or how deep this investment or how long or how deep this possible recession may go, but adding more things that's providing a substantial dividend at this point in time with depression. I mean, yeah, with depression in the market. But they have to be a dividend king or aristocrat. The reason why is because I need companies that have a track record and history of still paying dividends in good and bad times. So I don't, I'm not going to jump into a new company that said, oh, they're paying a 20% dividend because it's a new company. That don't matter. What I need is a track record of paying it. Like, let's just use it, Altria. I know everybody is so against that stock because, of the health concerns and yada, yada, yada. But they have a track record of paying and increasing their dividends over the past 25, 50 years. Now, if you count the last 25, 50 years, that includes the financial crisis. AT&T, they still paid a dividend during the financial crisis, dot-com bubble and stuff like that. And, though that's what I need, people that been through situations like this, through recessions, that's still going to pay. I'm not going with no fly-by-night close-in mutual funds. Uh, I'm not, yeah, close-in, the ones that trade during the stock market day. I'm not doing none of those closing funds. I'm not doing some new fly by night company who stocks at a dollar and they paying $1 in dividends. They don't have it. And then of course the company has to be able to pay for their dividends with their revenue or with their profits. So their dividend has to be covered by their profits. It can't be the company bringing in $1 million, but they're paying $4 million in dividends. That means they're borrowing the money to pay the dividend. But I will press more on those as my allocation. And as we talked about in the class, and I pointed out, I've been buying more of a dividend stock. I'm not gonna name the stock, but that's what I'm gonna do. I'm gonna keep it simple. I'm gonna keep going into the S&P 500, Nasdaq, dollar cost averaging down. As you know, I love when the stock market going down. I'm still too young. Now, if I was in my 70s and 80s, I would be worried about it going down. But for anybody, I believe that under 50 years old, you should be glad that the market is going down. Because if not, you're going to keep investing at higher prices. So the name of the game is to accumulate as many shares as possible at the lowest price possible and then ride it over the long term. So when you get to your golden years, you can bear the fruits of that. If the stock market keep going up and then you're putting in $1,000 a month, but the stock market keep going up. So let's say today, let's just say, let's go back to 2020. So let's say in 2020, you put $1,000 in a month and it can buy you 100 shares. But then you go to 2021 and the market keep going up, the same $1,000 a month is only buying you 70 shares. Then 22 come and it kept going up. Now it's buying you 50, 20 as it keep going up. So there's less shares you have that's going up. Yeah, you still putting $1,000 in, but that's less shares you have. But now imagine it's coming down now. So now that $1,000 is buying 125 shares or 200 shares, and they keep going down, and you accumulate a lot of shares in the down market. That's what's going. And then when it takes off, you're going to make more money in the long term. But you don't want to keep investing, buying high and hoping it goes higher. You want to buy low and for it to go higher. So any day that the stock market down is a good day for me.
For
So
me,
what do you got going on, or what's your plans?
I kind of thinned down my portfolio on buying this property. So right now,
Hmm.
um, I'll just share the stocks that I have. It's just Canopy Growth and SoFi, and I stuck with those two because they're my highest options payers. So I wanted to keep, income coming in from them. And then buying the SPY. My plan is to, I think I have a good position on Canopy. I want to build probably an equal position on SoFi and then move on to maybe Dutch Bros again. What I'm doing is just recycling the options premium, buying more SoFi shares. And then as I build that position, I'll move on to the next one. Um, and then other than that, just putting money into the SPY. But that's it. Kind of simple too. It's just two stocks and index funds. So, but that's what I got going on.
Yep. And the more simple you are in trading and you're not trying to or investing and you're not trying to go into things that you don't understand. I was talking to a gentleman, I think it was Friday, and he's telling me how much he's lost. And I'm thinking it's just value, because the stock market came down, the value of his portfolio went down. But then he started telling me the stocks that he's in, these stocks are never coming back. These was all trade. He was saying I was looking for a lottery ticket, and most people look for lottery tickets. They think the market is a casino, so they look for lottery tickets and things that they don't understand. They have no clue about. Like I believe one company that he was buying was it enhanced the oxygen levels in the tank in the oxygen tanks for COVID. I'm like, COVID's almost over with, and you still think it's going, and he's still in it. He's down 80%. I said, those stocks are not coming back. And they know it's hard for them to accept because they have so much money they went in there, but he bought it strictly as a lottery ticket, thinking that, oh, if this go up, $5, I'll make $50,000 or $100,000 or $1 million or whatever. But they didn't look at the fundamentals of financial, or they didn't really understand what was going on. They don't pay attention to financial news or understand how the dynamics is going. They don't follow where the money's going. They heard it from a friend who's supposed to be a guru and know something, but in the truth of it, it was just a gamble. You
Yeah,
should only invest in things that you understand. Even my mother, she's up there in age, and and then I control her account, but I won't put nothing in her account that she don't understand. So just a quick understanding is for her is Apple. She understands cell phones. She understands. She understands how it works. She understands that a new cycle gonna come out. People gonna keep buying phones, upgrading phones when they don't need phones. And Apple is a cash flow cow. Ford. My mom grew up in Detroit, Michigan, so she knows about the automotive industry, the big three, and of course, Apple pays a dividend and Ford pays a dividend. And her third one is Nike. Now, my mom wouldn't buy a name brand pair of shoes to save her life, but she do know that everybody buys shoes, and she think it's insane that people got 50, 60 pairs of shoes and they spend all this money on shoes. But she understands people are still going to do it. So she understands that market. So when Nike had the earnings and it crashed down to 82, I put my mom in Nike, and it's not. I don't sit there and say, "Oh, I know what's going on." Every stock that I get her, or every investment that I get her, I talk to her about it so she understands it, and she's say, "Okay, I understand that." It's an easy concept for them to understand. It shouldn't be nothing that you don't understand, or think that you're gonna read one article and then now you got the whole complex business down pat. That's just not how it should go. But that's what people will continue to do, and that's what they should do.
yeah. It's funny you brought that guy up because there's a guy at work. This was like about a year or two ago, but he during COVID, he was buying a share of every pharmaceutical company he could find. and he was saying that, oh, just one of them is gonna hit. And it's sad to see that that is actually the majority of the mentality that comes from people uh, that get involved in stock market. Whereas rather than treating it as you're investing in companies, you're like Warren Buffett says, you're buying companies, you're buying you know, enterprises that make money that should be treated as investments. And he says, as soon as people realize that or change their way of thinking and understand that, then the stock market wouldn't be or acting the way that it acts as a lottery machine, basically.
Right. And people goal is always to think of get rich quick instead of getting rich for sure. And that's the downfall of it. But for those people that do it, I mean that's what makes an efficient market. That's what makes the market people can buy and sell because you're gonna have crazy people that's going to buy. That allows you to sell options and make income off of people that have irrational thoughts about stocks. So it all works. It works better for the people that is the casino, and it works bad for the people that's the gamblers, just like in a regular casino. The reason why we have so many casinos around the world is because they all make money and they take advantage of the gamblers. And as long as that's going on, I'll continue to be the casino and let the gamblers be the gamblers, and we'll make out like a band in the lumber.
Yeah. Yep. Well, with all that being said, guys, if you like the video, hit the like button. Don't forget to leave a comment if you have any questions. Hit the subscribe button, share with your friends and family, and we'll see you guys in the next one.